All right, I'm long here. All right, we have a mitigation and coupled with a breaker, coupled with this 5-minute bullish fair value gap. And we have a bullish breaker. We have a low, high, lower low, higher high, coupled with that 5-minute bullish breaker. I want to see it stay in this upper half of this bullish breaker, right, and expand. I don't want to see it come body closes below this lower half. I do not want to see no candlestick closes in this lower half. All right, so you see here, for some reason my Wi-Fi went out. So as you see, it went black, but you see we came back. I had to fast forward and edit some out. So we hit TP, you see it went out again. So I apologize for that you couldn't get the full video perfectly. But you see here, we done sold some. It's still going up. We only in like 3 more, and I put my stop loss right below that order block, and it came and stopped me out. But let's get it, man. Appreciate it for watching. All right, so you see I took my first loss here. Oh man, my Wi-Fi it just keeps going out. So I'm trying to do the little my trade. Okay, right here. So I'm gonna do it kind of fast. My first long was here. We got a sweep of liquidity, right? Now we got a bullish. We got a where is it? Right here. We got the order block here, coupled with the fair value gap, right? We got like a little low high, lower low higher high. So I got my long right here. Once it closed right here, I scaled into another contract. When they create that order block here, you 2 down close candles with the close above, scale into 5 more, and you see it stop me out here. And you see it pulled back right to this OB's wick. Remember, the most sensitive part of the order block is from the closing price or the opening to the high wick. See how it comes into it perfectly, creates another order block, comes up, and then we create a bullish breaker. That's what the reason I got into my second play. We have a low high, lower low, higher high, and then so that's my bullish breaker, which is the last bullish candle here. And as you see, I bought 10 and I bought 5 more here. I was targeting here. So I got in at, let's say I got in at 410. 410. As you see, I always take 50 points. So I was targeting 92. It went as high as 85. So I see I got my first sell like in the 60, 70 ranges. So, and my stop loss was right below. So we got a good R&R. So I sold 8 here. Sold another 4 here. And then my last 3 was here, which was my stop loss was right below this order block here. Because if it was good, you want to see it do this. You want to see it. So once it clears the order block right here, it comes back into it, the bullish breaker, or aka in the order block, coupled with the fair value gap. Come up, create another order block, use it, come up, right? You saw how it didn't take the high, so it generated liquidity, and we have multiple highs up there. It comes back down to this most sensitive part of the order block, and then expand higher. That's why I have my stop right below here, because if it was good, it would have stayed here, and we have this inverse fair value gap that's right here. You see what I'm saying? Coupled with this, so, but anyways, appreciate y'all for tuning in. Let's get it. So yeah, I took 1 loss and then 1 win. And then on the day, I finished the day up, I think it was like $300 again, 380. So that trade I made, like, it was like 1,300, 1,400, but with this, I kind of over leveraged. I jumped into 5 and then another 5. So I was in the mini, and I put my stop loss was like 60 points. That's the difference between trading real money and trading prop firm. When you trade prop firm, you're not really like worried too much about the stop loss. You just put it below where you expect it to go. But when you got real money, when you trade with real money, you're looking at you're calculating every single point because it's real money. So that's the difference between trading from prop firm and real money. So you gotta trade the same way. So anyways, I went long at 411. See, I went long. So this is where I messed up at. It did not close above this 5 minute fair value gap. I anticipated it and I bought it and I got filled way up here. So I had to put my stop loss where? Below this order block. Below this order block here. So that's why 60 something points. You see, I got stopped out. You see right at the lower the order block. So that's why 60 points, 10 contracts. That's like $1,200, I think. So that's why this trade I had to jump into 20 because I had to a little bit over leverage to get it back, just like I did the last day. But let's get it. Still a good trade. But definitely have to journal on this first trade. And I gotta stop over leveraging like this on the first one. Like, I gotta chill.